Hello, I'm Jordan Blevins, Vice President and Senior Portfolio Manager for TrustBank Wealth Management, and welcome to this installment of TrustBank's Chart of the Month. In recent months, I've shared the results of corporate earnings and how strong they've been, and our view that they continue to be the primary driver of stock market performance. Markets have been making new all-time highs seemingly every week lately. And now that Q1 2026 earnings have all been reported, growth came in at an astonishing 27% rate over last year. Long-term, earnings and their expected growth are what affect the stock market the most, and that should make sense. But one argument you may hear lately is that all this growth is somewhat artificial and being driven by just a handful of companies, namely many of the AI-related technology stocks. Well, that's certainly true to some extent. They do have some of the strongest earnings growth rates lately and have been among the best performing stocks in recent years. However, we can see in this month's Chart of the Month that earnings growth across the stock market is actually broadening out, and more companies are contributing to the strong growth we've seen lately. This is a healthy development for the market. First, if you have not heard the term, the Magnificent Seven refers to a group of large technology companies that have been leading both market performance and earnings growth in recent years. As the chart shows, we can compare the S&P 500 as a whole, the S&P 500 excluding those Magnificent Seven, and the Magnificent Seven stocks by themselves. You can see that their contribution to earnings has declined over recent years, which means the other 493 companies are contributing more to overall earnings growth. That's the broadening out that I mentioned earlier. We can also see that growth in earnings and recent upward revisions have been strong for both the Magnificent Seven and the other 493 stocks as a group, with recent estimates now calling for approximately 18% earnings growth this year. This continued improvement across a broader group of companies is an encouraging sign for the overall market. This may take a moment to sink in, but it's actually good news. It means more and more of the stocks in our overall market are growing and contributing to overall success. At TrustBank, we've designed strategies to keep our clients well diversified across markets and asset classes. We believe thoughtful diversification is the key to managing risk and uncovering opportunity through all market cycles. If you'd like to explore how this approach can support your goals, we'd love to connect with you.